Hello, welcome to my channel. I'm Thomasin PA2066. Today is 17th of May 2022. I would like to do a topic on real property gains tax topic. It is quite a detailed topic on the recent changes, so I put it as recent changes compressed. So let me begin. Hi, welcome to my channel. I am Thomasin PA2066. Today is 17th of May 2022. These slides are done yesterday, 16th of May. So Fine Waste series extension on the Fine Waste series, which is probably related more to vendor. For under vendor, if you go back to Fine Waste series, this RPGT or real property gains tax topic is under vendor. You can look under vendor 2, the video vendor 2. So this is about property investing and selling issues. So this part means that I am expanding Fine Waste series to almost 26 different subtopics. So this topic is on real property gains tax recent changes, and I would like to compress it. So this compressed version of what are the recent changes. Let me begin. So we will see that since 1995 to year 2022, or most recent, this one I got it from lawnstreet.com.my, and you can actually see that in the earlier days, first year, there were years that were 30%, and those years that were actually reduced down to 5%. So some years it seems that the government's policy on real property gains had been very lenient, and some years that it has been pushed back to 30% now. So it's not that the government recently only pushed up to 30% due to speculation. Actually, in the early years, 1995 to 2007, buying and selling of real property in the first 2 years had been on 30% tax rate. So this is for individual. So we actually talk about topic which is quite complicated. If you are studying for the diploma in estate agency exam, this topic will come out in the property taxation D04 paper on the part 1. And a lot of people fail D04 property taxation also due to many reasons. One of it is complicated calculations on real property gains tax as well as stamp duty. So this means I like to compress this topic for revision. So I'm not going to touch on those calculations as in this particular slide that I have already done in vendor 2 under the Fine Waste series. You go back to my video on the vendor 2, you look at this topic on RPGT calculation. This is at timestamp 20 minutes 40 seconds. So roughly around there, you go there and have a look. I'm not going to repeat here. Similarly, I would like to disclaim that this video recording is for my own revision, and it's not for newbies. So if you are new to property taxation D04, this will be a heavy topic for you. You don't find it easy to understand, please don't get too agitated or too disgusted, because this is a more advanced level. You can go back to my other video for earlier entry level. So I'm not going to do calculation on those incidental costs, how to deduct, how to maximize your deductible, allowable deductions for your exemption or in calculation of the real property gains. So anyway, people fail D04 property taxation. There are many challenges. I just want to use this slide to maybe remind us that there are reasons commonly seen as an obstacle for passing this paper. One is some people don't like to calculate, so calculation is a difficult thing. Usually people do this question on stamp duty as well as real property gain tax because of the transaction. That means transfer of property, therefore it involves the stamp duty as well as RPGT. So they confuse between stamp duty and RPGT. So this is also for the reason that a lot of people, when they calculate, they thought that they are calculating for stamp duty, and then they forgot that the rate that they use is a different rate. This is the wrong rate. And over years also there were changes in the tax tariff, the rates that they use for calculation. Stamp duty not so much on the scale rate, but then for RPGT, for the first 3 years or first 2 years, and after the 3 years, 4th year, what is the rate to use, and 5th year, what is the rate to use? People get confused. There are also tax exemption orders. That means what are the category of exemption where you enjoy exemption from paying real property gains tax. So this one also year in year out, there are chances that you get confused, changes, and some actually no more. And you actually look at it as an election to also get exemption, and there are some election to do to get exemption. So this election to do, I will go in later, but again, people get confused also sometimes. Is it automatic? Is it elect to get exemption? What are the available deductions? What are the incidental costs? Incidental costs that you can deduct out from your gains. There are also statutory exemptions, certain types of situation where the government says that, okay, you do not need to pay RPGT. So these are all reasons that are confusing our examination questions, and you do not actually quite do it every day. Then you actually get involved in whether it's a correct way of doing it or not in the exam hall. So RPGT questions are challenges. I provide some solutions. This is my own way. I feel that it should be easier if you follow my method. That is to split. If you have a question asking on both stamp duty and RPGT, on the calculation part, I would prefer to keep into one part for stamp duty as a stamp duty calculation from the beginning until the end. That means from party A who transfer the property to party B, and then B later on transfer it to party C. The whole process, you think of it as only involving stamp duty. You answer that part of the question as stamp duty. Don't do an combination. That means the transaction from party A to party B, you calculate the stamp duty, then later you calculate RPGT, and then party B to party C, the subsequent one, you do stamp duty again, and then do a RPGT again. So when you do that, you get confused. Rather, you should think of only one. Thinking only RPGT when you do from the beginning until the end, or thinking of stamp duty when you do beginning until the end. So in that sense, you probably tend to control your flow of thoughts. Anyway, I'm trying to summarize to compress what happened between 2018 when there are changes in the RPGT until 2022, the current year. So 2018, of course, we understand that there was a change of government, and therefore there were some changes. So this I will provide all in either the Gazette or the Finance Act. That means every year, end of the year, when they have a budget, then they propose this budget in the parliament. Then later on becomes an act. So this Finance Act came from the Finance Bill proposed in the parliament and approved, and therefore Gazette is in immediate following year in the system of Gazette. So we try and see from Barisan National Government to PH government to PN government over 2018 to 2022, 4 years time. You can see that we have changed a bit on the part of bottom onwards. From the 6 years onwards, there was no rates until you happen to see on the 2019 and 2021. There was a 5%, and then after that it became new. So there were changes in this. This one I will go in because it involves a lot of confusion. People think of it as a confusion. The rest, if you look at first year, second year, third year, mostly if you just remember 30% for the first 3 years, subsequently fourth year is 20%, fifth year is 15%. So some actually remember when they were doing earlier exam, they remember fifth year is 5%. So they get confused also with the 5% and the 5% subsequent years. Never mind, these are all you can refer in the chart. But one thing I like to pinpoint is that from the 2019 to 2022, these two columns or 3 years, 2019 to 2022, there were changes, and you can see that I have circled it in purple color, new for 2022. So these are the things that I'm going to talk about. Acquisition price base year changes. So this is what is sometimes people get confused. Is like you are looking at what is the calculation when you look at the best year, because of the fact that 2019 was the time when they implemented best year of back to so the January 1st 2000. So whatever earlier old houses, they will use the value of the acquisition price on the market value on the time of 1st of January 2000, year 2000. Then later they actually changed this base year to January 1st, 2013. So this actually also caused some confusion. So some people say that when the question came out in the exam, when a year of disposal is in the 2020, and then the base year follow 2013, or is it follow the year 2000? So they get confused on this. So anyway, later on I will provide example for you to see. So which value to use is the issue So just now I mentioned just year 2000 or the year 2013 for the base year. So different rates for different taxable parties. This one also confuse a lot of people. Sometimes if you look at the question, if they did not mention it is company, will assume it is individual. So in case it actually mention it is a company, or if it is a non-citizen or foreigner, then they follow a different rate from the individual. Most of us will remember the rate for the individual, but for the foreigner and the non-individual, that means they are companies, they will follow a different tax rate. So of course higher, most higher. So how to start in this presentation also, I'm thinking how to start, because 2018 to 2021, so I would have to start maybe the earlier years in the historical manner. So what we want to do is, in this presentation, we want to make a complicated timeline from the changes over years into a simple manner to remember. What exactly is RPGT? RPGT, in its core meaning, is actually government trying to gain revenue from disposal of real estate. And real estate here can also means real estate company, a company that sells shares to people, shareholders, and then this shareholding company involved in real estate, so they are the control company. So not necessarily it must be just a real estate, but it can be also a company share that deals with real estate. So it has to be a real estate company, maybe holding a lot of real estate, or it has a company that purposely form as a control company. So it's a tax on what? It tax on the gains. So if you bought a property many years ago and now you sell over the gain, which means you make money, then this gain should need to pay for taxes. So this taxes is RPGT, real property gains. So it's a gains on the property value. So government taxing the people. So some of these issue you think about. So if you hold property and the property make money over years, it should be your own gain. Why should you pay tax? let me put it this way: you have no choice but to have a property because you need to stay in a place. So you have a roof over your head. So how can the government tax you when you actually sell off this property? So these are arguments, and therefore this argument became a allowable election for an exemption. So this is under Schedule 3 under private residence. So this one you can actually get once in a lifetime exemption. No need to pay . So this is a reason why government have to establish some of these solutions to answer question like that. And over time, when you have government that wants to tax on the citizen of the country and tax on certain more well-to-do people, then real property becomes a vehicle to tax people. Because if you are poor, then probably you won't own a lot of real estate . You won't own a lot of real property. So real property has a situation of being given a more luxury way of government to tax the holding of or the holder of this real property . So there are inheritance tax and all those when you pass on in other countries, then this property being passed on to your next of kin, then this next of kin has to pay the inheritance tax, but not in Malaysia yet. They were once talking about this inheritance tax, but the idea is real estate being it is rich person's game and became a vehicle for tax for the government. But when it has to be reasonable in the scenario where, well, it's not going to tax people's roof over the head and make people suffer. So that's the reason why there are exemptions, there are elections. In the PH government time, when they introduced a 5% tax rate for the 6 years onwards, that means whenever you sell, you have to pay a 5% on the gain. So there are a lot of voices and people are not happy because over many years there was no such thing. And to think about it, it was also because the country was in bad shape. They needed the money, so they wanted to tax on the gains on the real estate transfer . If you think about the Real Property Gains Tax Act, it came about to do one important reason for its existence is to actually tax on immediate flipping. When you buy a property and you sell the property within the first 3 years, a lot of time the property needs construction, so a lot only get it constructed and given vacant possession in the 3 years time. So a lot of people, when they take key, they will sell the property at a profit, a handsome profit, and therefore government see this as a speculation to the property market. So the actual person who never really had a choice but to buy, to stay, having to have a roof over the head, having to pay on these 3 years speculatively high price, the government introduced the high 30% gain tax. So these gains on 30% taxable try to cool down the speculative way of how the property market is being manipulated. So this is a core reason why the RPGT came about in the first place. And again, now it also become a source of revenue to generate for the government to pay the tax. And we know that the government owes a lot of money, therefore they are looking at ways and means to tax to get the coffer filled up. And during the COVID time also, there were issues that people already cannot survive, so they have to sell property maybe to rescue their business. So when they have to sell property, sometimes due to the taxes that they have to pay, it suffers losses in the total gain. That means when you are supposed to gain X amount, but then because the government tax up 5%, then you are in a way reluctant to sell, or sometimes the buyer would want in a way to negotiate, and then you are, as a seller, you are worried that the negotiated price is low and the government someone going to tax you 5%, therefore you don't want to sell. So in such a harsh scenario, the COVID time, government have in fact introduced Penjana. There is one Penjana, and this Penjana allows 3 residential property without having to pay real property gains tax. So all these are example of how government use RPGT or introduce exemption order in the RPGT in order to help the people. Anyway, it's a more global way of looking at RPGT. Let me progress to the next slide. So RPGT in 2007 to 2009, between the time, they get a full exemption for RPGT in the old days. Later on in RPGT 2010, they introduced a flat rate of 5%. After that, again, they have introduced the purpose of cooling down so that they prevent speculation to 10%. And after that, again, because of the speculative market, they push it up to higher. So going up to 15% and later on to 30%. So 2014, so they push up to 30%. So therefore, you can understand that in the earlier days, there were not so much of speculation, but over the time, 2001 to 2010, and later on, the second phase, which is 2010 to 2020, this portion, a lot of speculation. And after that, we have the COVID, so therefore, it was also due to no money. So the flat rate 5% at 6 years onwards, it was introduced in 2019. So this is historical. For new RPGT exemption in 2022, in October 2021, the government announced during budget 22 that effective January 2022, RPGT will no longer, so revert back to the old days. No need to pay if you have an old house, because the base year has been non-relevant anymore because the rate becomes 0. So this means that RPGT rate for property disposed in the 6th and the subsequent years after acquisition will be reduced from 5% to 0%, effective from 1st of January 2022. So this one I would just show you some Finance Act extract that I get. So 2021, you can see that there is the 5% disposal in the 6 years after the sale, after the date of acquisition, 5%. Then in the 2022, this been removed and inserted with the new. So where is the Finance Act that gives this? Let me show you. So this is the Finance Act 2021, which is in the Parliament and 30th and 31st December 2021, just last year December. Starting in the year for revert back, amendment to Schedule 2, amendment to Schedule 4, and amendment to Schedule 5. So Schedule 5 says what? Schedule 5 says the tax rate. So the tax rate in the Schedule 5 says that 5%, the word new appear in the 4th line. So this means you go back so here is paused in the 6 years after the date, the new to replace on the 4th line. Okay, so you can see this recorded as in Finance Act. So I like to just touch on the issue of base year, 2018 to 2019 and 2021. So this over time, 6 years onward was 0 in the old days. 2018 budget by the PH government put the 5% on all gains of all properties. That means when you have a property inherited or you bought it when you were very young, 30 years ago, all this acquisition price, they would not go back to 30 years ago, but they would go back to 1st of January year 2000. So that particular market value. So this one from the base year, they changed it in the year 2018 Finance Act, base year January 2000, and 5% for more than 5 years after acquisition. Here in the amendment, they says that the purpose of the schedule where disposal subject to tax under Part 1 of the Schedule 5, reference to January 1970 shall be considered as reference to 1st January 2000. So 1st January 2000 was the base year that introduced by the Finance Act 2018. And the same thing also for Schedule 3, they have to do the change because in the Act itself it was January 1st, 1970. And also new, the last time it was new on the 4th line, changed to 5%. Now this has been reverted back, I showed you just now. So example 1, in a example I want to show the difference when you use the base year 1st January 2000. Look at this hypothetical 2019 sold at 1 million ringgit, but it was an old house. You actually acquired this old house 30 years ago in time 30 years ago, 1989 So 1989 you bought this house at that one time was only 300,000 probably a corner house, double story. And over the years you've been staying in this house, and now in 2019 you sold it at 1 million. So if you use the base year January 1st year 2000, you have to take the market value of the same house but on the January 1st year 2000. So you go back to JPPH, Jabatan Perkhidmatan Penilaian Harta. So this the market value I assume is 500,000 during the time where you that back to January 1st 2000. So your gain will be actually 500,000 gain because you sold at 1 million. The base year 2000 it was value market value of 500k. So the tax after you elect to deduct 10%, because every citizen of Malaysia can deduct 10% from the gain. So the gain 10% is 50,000. Then it is 450,000. So by right you are supposed to pay 5%. 5% for the 450,000, which is 22,500 ringgit. A lot of money. So imagine the government is taxing people and making money. So now during the 2019 finance bill, this issue of 1st of January was changed to 1st of January 2013. From the year 1st of January 2000 changed to 1st of January 2013. So this acquisition and disposal for the purpose of this schedule where the disposal chargeable asset is subject to Part 1 Schedule 5, reference to 1st January 1970 shall be considered as reference to 1st January 2013. So just now it was 2000 year and now it became 2013. So if you use this calculation, then of course it became more expensive because year 2013 is more recent than year 2000, alright? So it using the same types of hypothetical example, we use the example just now. Instead of the 500,000 value, we move it up to 800,000. So let's say in year 2013, the market value of the same house is actually 800,000. So the gain is only 200,000 gain. 200,000 gain minus 10%, you are subject only to 9,000 tax on the RPGT. So this is how it differs from the base year of year 2000 to year 2013. So this was introduced in the 2019 budget. So on year 2020 and year 2021, this calculation was used. Then after that, 2021 budget, they remove it. So they remove it. How do they remove it? They put that more than 6 years, the rate is 0. When it's 0, that means you don't need to look at the valuation of the acquisition because you're not going to tax anymore. Right, so in the year 2022, no need the base year because it was new. There's no more rate for calculation of taxes, and therefore new appear in the 4th line. So if you look at the tax in a more easier to manner understanding, 2018 it was always 0, and 2019 it made it to 5%, Schedule 5, and 2020 still 5%, 2021 still 5%, only 2022 by the budget 2021 it became back to 0. So the base year, if you 2018, because new no need, not applicable. Only when introduced in the budget 2019, it was using year 2000. So this was the heavy one, because whatever old house that you sold, you'll be paying a lot of tax. Then in the time after that, it became 2013, and therefore the rate was smoother, softer, not so bad. And after that, make back to zero again. So this is a good thing that has happened. And over these years, imagine it was all COVID, tough time. Government also have a tough time.